Ladies and gentlemen, welcome back to the channel. Wow, what a market today. We have a lot of news to share with you. A bunch of headlines from Lutnick, Besson, Trump. We have some new data that is shocking, that is boosting the odds of a January 26th rate cut. We have some earnings upcoming today and after hours that could be important, and economic data coming out tomorrow morning that will be very important. All of that we will cover in today's episode. We will also talk about, again, why you're likely going to see a December risk on rally for this market. Small caps, AI, that trade is about to come back to life in a pretty big way, and this could extend into 2026. I mean, the setup looks really good for next year. And we'll talk about all of that in today's episode. Do me a quick favor before we get into all of it. Hit that like button as well as subscribe to the channel if you've not done so already. It's free 99, cost you absolutely nothing to, help push this video out to more people that right now need to hear this. There's a lot of bears out there that are about to miss the move. So thank you if you went ahead and did that. If you guys do want to come trade and invest with us, check that link out down below in the description of today's episode. One of our larger holdings is actually reporting earnings today and after hours. So it's going to be an exciting next few hours, I think. Come join us, link down below. With that said, let's get started. Now, in your broader markets today, there was a lot of news, but before we get into that, let's take a look at what's happening on the headlines today, or your headline indexes. The VIX is down 2.5%, sitting at 16.16, so fear has really come down recently, but still elevated from your lower end ranges where you can get into 15 or the 14 level, but fear is largely gone in that metric. Okay, now there's still a lot of fear and uncertainty within single stocks, but from the VIX and the S&P headline perspective, not a lot of fear there. Russell 2000 is up 1.07%. It is the leading index today. NASDAQ up 0.1%, so barely green. S&P up 0.24%. The Dow is up 0.64%. So the Dow and the Russell are the leading indexes today. And this likely has to do with the economic data that came out this morning. You can see today we had two important sets of data. Number one was the ADP employment change. For last month, you were at 42,000 positive jobs. That was actually revised up to 47,000. Okay, so an upwards revision for last month. The expectation for November was positive 10,000 jobs. You came in at negative 32,000 jobs today. So that was way worse than expected, to say the least. Okay, you got a lot of data out for September as well. Pretty much came in line with expectations across the board. Wasn't a big shock in any of that data. Again, it's for September, so markets, I don't think, really care about that too much. It's outdated. You did get the ISM Services PMIs that came in at 52.6 on the headline. That actually beat estimates of 52.1. Business activity came in at 54.5, meeting expectations. Employment came in at 48.9, beating expectations of 48. New orders came in at 52.9, missing expectations of 56.4. But look at this. Prices came in at 65.4, beating expectations. Well, technically missing, but it's a beat from Wall Street standards of 70.3. So a little bit weaker in new orders, better in business activity, better in employment, and much better in prices. So that's actually really good. Now, it's survey data. It's not hard data. So, Wall Street's only going to look at it so much. But it is raising the odds of a January 26th rate cut. Okay, the odds yesterday of a rate cut in December 10th, you're almost certainly going to get a cut. Around an 85% chance of a cut December 10th. So that's not really what we're looking at this point. What we want to be watching for in the next couple of data sets is what happens to the odds of a cut January 26th. Okay. Yesterday, the odds were 29.3% at yesterday's close. Today, they're now 31.2%, so that's up a bit. But from last week, you were at only a 22.6% chance of a cut January 26th. And again, now you're at 31.2%. The odds of a pause or no cut in January, 58.7%. So that is still the most likely outcome in the Fed funds futures market right now. But if you get data that looks like this, December 16th, and the Fed's kind of open-minded to going either way, pausing or cutting January, you're going to pretty shortly here be pricing in another cut in January. And that's just going to help fuel this this market. And what I believe is going to be a risk on end of the year rally. You know, a lot of areas have recovered recently from some of the selling that we've seen, some of the correction that we've seen. One area that has not recovered at all is the risk on area, the AI trade, the, hyper growth trade. A lot of these companies are high quality companies, right? Running tight ships. And they just have not recovered at all in this market. The headline index has, right? The S&P has largely recovered the decline, but it's in the healthcare, the staple names, the large companies. A lot of the small caps have, again, not recovered at all. Now, again, there's still a lot of fear out there, not in the headline S&P, but in single stocks. CNN Fear and Greed Index is sitting at 24. Yesterday, it was at 18. Well, we're getting an update now. It's at 27. So still very fearful here. Market momentum is fear, stock price strength, extreme fear, stock price breadth, extreme fear. These are two areas that I think you have to see start to recover to get the markets to continue to move higher here, right? Stock price strength, almost no recovery. Stock price breadth, very little recovery so far. Okay, you need to see a broader market rally. You need to see the risk on areas also begin to work for a December rally, in my personal opinion. Put and call options in fear, market volatility is neutral, safe haven demand, extreme fear, junk bond demand in extreme fear as well. Now, again, we did get a new AI investor sentiment survey on Thanksgiving. We're going to be getting another one coming out tomorrow, but basically in the last 2 weeks, bullish investors fell about 1% to 32%. Neutral investors rose about 2% from 23% to 25%. And bearish investors fell about 1% from 43.6% to 42.7%. So, it's pretty unusual to have more bears than bulls. But right now, there's 10% more bears than bulls. And I don't know how much these numbers are going to move in the reading that comes out on Thursday. This is really unusual considering the S&P is at all-time highs. Okay? It's highlighting the fear out there in single stocks, right? It's highlighting you haven't seen that full recovery yet. Okay? And I think your portfolios would agree with that. If you're invested in a lot of the AI stocks, you're like, how's the S&P at all-time highs? My portfolio is barely off of yearly lows for a lot of people. Okay, and it's because of what I'm highlighting here. You've really only seen the big stocks work that have helped the index move higher. But I think in December, especially as we get closer to a rate cut and maybe even pricing in another rate cut in January, as Wall Street comes to realize 2026 has a really good setup, right? Where we're going to be looking at hopefully lower inflation, better consumer, more rate cuts, a new Fed chair that is more bullish. AI is alive and well. Big beautiful bill, no tax on tips, no tax on overtime, all of that, as we've talked about many times on this channel. But also real estate picking up next year. The backdrop looks really good for equities and especially for that small cap risk on trade. Not even necessarily small cap, but risk on trade, like the AI trade. U.S. Treasury's Livorna says we need the Fed to help, but the economy will turn. She says AI is complementary to the existing workforce. We need skilled trades despite AI. She says we're expecting de minimis inflation effects from tariffs next year. She says we don't see tariffs as being inflationary. Inflation is rooted in services, which is very much true. Historically, goods tend to be negative in the inflation report, right? Your TV that you bought 5 years ago is cheaper today than it was 5 years ago, right? That's factual. Most things you buy, you can buy a better computer today than you could 5 years ago for the same or better or lower price. Okay, I just bought a computer recently because I would get through editing a video or recording a video, like a 30-minute 40-minute long video, my computer would crash like 5 times a day. I'm like, okay, I gotta upgrade. When I went to the store, you can get a computer that's much better than the one I bought 5 years ago for a cheaper price. Or it was around the same price, okay? Which is, again, that's what happens with inflation in this country. Goods tend to go down. Services tend to go up a lot more than 2%. And she's making the argument that tariffs don't really affect services much. She also says that it appears that we moved close to 4% GDP growth in Q3. Also in the news today, NVIDIA's Jensen Huang will be visiting Capitol Hill to answer questions about AI. Taiwan says today that U.S.-Taiwan cooperation has even expanded under Trump. U.S. Treasury's Livorna says we don't need a 50-year mortgage if the Fed was lowering rates. And the Treasury says today that we're expecting more growth in 2026 to emerge from the Trump Tax Act. And this is something I don't think a lot of people on Wall Street are paying much attention to for part of the bull case for next year and the consumer getting better. I mean, no tax on tips. If you make $25,000, that's going to be anywhere from $2,000 to $5,000 you're going to get back in your tax return. That's like a stimulus check for 60 to 80 million Americans next year, let alone overtime, which is capped at $14,500. Which the tax on that is like 30 to 40% in most cases or more. I mean, that could be thousands of dollars as well. AMD's CEO Lisa Su today says memory shortage might be a minor perturbance to the AI market. Howard Lutnick today says we have to train 5 million Americans for chips jobs. Lutnick today says the U.S. can reshore advanced manufacturing with robotics. Lutnick says a deal with Taiwan will bring more investment to the U.S. Lutnick says we're in the midst of discussions with Taiwan. Lutnick today says we will have tariffs no matter what going forward. Lutnick says that we're going to win the Supreme Court case on tariffs. But Bessent today says Trump admin will be able to replicate tariffs even if it loses the Supreme Court decision. He says here, quote, Bessent cited several sections of 1962 Trade Act that give the president sweeping powers over import duties. He says, quote, we can recreate the exact tariff structure with sections 301, 232, and 122, he said during an onstage interview at the New York Times Deal Book Summit today. U.S. Commerce Secretary Lutnick says European economies are attacking AI development with all of their rules. And Lutnick says he sees GDP over 4% in 2026. And today, the U.S. November ISM Services Prices Paid Index fell to a 7-month low. So, as we talked about earlier, this was really good. Truist today says the bull market is still strong. Truist's Keith Lerner says the U.S. bull market remains intact with neither the economic expansion nor equity rally near its end. He expects 2.3% GDP growth in 2026, supported by Fed cuts, tax relief, and AI-driven spending. Corporate earnings are forecast to grow in the low double digits, with tech and AI leading, broader market participation, small cap opportunities, and constructive economic factors, including a $158 billion tax refund boost. Again, I've talked about this so many times. No tax on tips, no tax on overtime. Okay? Being able to write off auto loan interest, different changes to CapEx, where you can depreciate assets 100% in the first year, things like that, okay? So they have a $158 billion number on this. That's a lot of extra spending. Just like Black Friday, like Cyber Monday, did like $12 billion in spending, and that was a record. Okay, you're looking at like 13 Black Fridays worth of spending in additional spending next year, or spending power next year being refunded back to Americans. That's substantial. He says support continued market gains despite potential volatility next year. Bessent says that private credit growth is a sign that bank regulation is too tight. And Bessent says the Trump admin and regulatory changes will unlock $2.5 trillion more in lending capacity from banks. And Bessent says today the U.S. is a very good ally of China and Taiwan. Relationships are unchanged. Bessent says, quote, I'm very optimistic about the economy next year. CapEx is up. But he says that certain sectors of the economy have weakened and we need interest rate cuts. Scott Bessent today says Trump has normalized the idea of a 15 to 20% tariff. Now, also worth mentioning today is Bitcoin is holding up. It's holding its rally from yesterday. Bitcoin down a little bit in the last couple of hours, but sitting just under 93,000 per coin. There's been a lot of talk on Reddit and StockTwits and other, social media platforms around that 97,000 level on Bitcoin starts to trigger short sellers covering on a lot of short positions, which basically means you could see a pretty rapid rise from that level and breaking above the 100,000 level. Okay, you can break above 100,000, you get back to 110, 120 probably pretty quickly. And that would also help to spur risk on stocks in this market, in my opinion, as the two have been pretty correlated. Now, we do have some pretty important earnings happening today in after hours as well. You have Salesforce, Snowflake, C3 AI, UiPath, Five Below, Health Equity, and PVH. These are big for the AI trade, right? UiPath, this is one that I've actually been buying pretty aggressive recently, so we'll see how that goes. They have partnerships with C3 AI, Snowflake, NVIDIA. Coincidentally, the Snowflake and C3 AI report earnings today and after hours as well. So some pretty big AI names reporting today and after hours. Tomorrow in pre-market, you have Kroger, Dollar General, Hormel Foods, Build-A-Bear Workshop, and TD Bank. And then in after hours tomorrow, you have Rubrik, DocuSign, Centennial One, Samsara, ChargePoint, Ulta Beauty, Hewlett Packard Enterprise, and Sportsman's Warehouse. And then Friday pre-market, you have Victoria's Secret. Now, as far as tomorrow, you do get initial jobless claims. You're expecting around 220,000. Last week, you had the lowest number since April, where you came in at 216,000. So you do want to see a low number because you don't want a recession, right? But you don't want to see something so low that they're like, it throws into question whether the Fed would even discuss a rate cut in January. Now, tomorrow morning at 8:30 in the morning, you're also going to get Challenger job cuts. These are planned layoffs. You're expecting 98,000. It actually could come in lower than that, considering how strong the holiday shopping season has been so far. There's probably not going to be a whole lot of planned layoffs. But last month for October, you were at 153,000. So that's going to be a big data set that will also move the needle for projected rate cuts in January and move around your small cap trade tomorrow. Now, on Friday, we are going to get some data as well. Core PCE price index month over month. This is the Fed's preferred metric of inflation, but it's for September. Remember, we did get these September and I believe the October CPI report while the government was shut down because of the Social Security cost of adjustment, which I estimated at the time the only reason that the government would put out CPI during a government shutdown when they're not releasing other data is because it's going to come out really good, and it came out really good. Okay, so this is the lagged behind PCE number from September. It could move markets, but I doubt it. You do get Michigan consumer sentiment for December as well Friday, personal income and personal spending on Friday. But again, these data sets, although they're very important, are for September, so it's not going to tell us a whole lot about what's going on right now. And Wall Street cares about what's happening right now and what's going to happen in the future, not what happened 2 months ago. So again, tactically speaking, Bitcoin moves higher, getting closer to 100,000. You could see a pretty aggressive move in Bitcoin. Seasonals are bullish during this time of the year. We've went through this correction where a lot of Wall Street is underweight this market from a headline perspective and a you know, like a small cap AI perspective. You're really underweight in those areas. Even a lot of retail investors have grown pretty bearish in the last 8 weeks or so, and those are ripe market conditions for a reversal. Now, again, you're looking ahead towards a rate cut December 10th, probably a pretty neutral Fed overall. The odds of a January cut probably are going to continue to rise. If not January, I think at the next Fed meeting, I believe that's in March, we would be looking at another Fed rate cut. The outlook for next year looks really strong as well for reasons we've talked about. Big beautiful bill, no tax on tips, no tax on overtime, changes in depreciation and taxes overall. Consumers going to get better. Inflation likely to continue to decline. Trade certainty. There's no way we have more trade uncertainty next year than we had this year. That to me just seems impossible. Okay. AI is alive and well. Real estate might start to pick up in volumes next year. That could unlock a lot of extra spending power for this economy. We get a new Fed in May, multiple rate cuts next year. I mean, there's a lot that looks good next year and not a lot that looks bad. So from a tactical perspective, you should be looking at an end of the year rally, but it may continue into 2026 for a while just because of how strong the setup looks, and Wall Street prices things in ahead of time. So as the narrative grows, wow, we might have a really good 2026. People are going to price that in ahead of time, which it could be a front-loaded year next year where a lot of the rally comes in the first half of 2026, especially coming off of this correction or crash or whatever you want to call what we just had for certain areas of this market. So let me know your thoughts on all of this down below in the comment section. Hit the like button as well as subscribe to the channel if you've not done so already. Check that link out down below in the description of today's episode if you guys want to come trade and invest alongside us. Have a great rest of your day, and I will see you in the next one.